6:47 a.m. Your phone lights up. Not a message, not a notification, a number. Minus $47,200. It doesn't shout, it doesn't threaten, it just sits there, quiet, patient, growing. And the most dangerous part? You don't panic. Because somewhere along the way, you were taught this is normal. Part 1. The first trap. Normalized debt. You're 23. You have student loans, a credit card you opened in college, a laptop you're still paying off. Nothing unusual. Everyone you know looks the same. You walk into your office building. 14th floor. Gray cubicle. Predictable life. You tell yourself, this is temporary. I'll figure it out later. So you do what everyone does. You pay the minimum. Not because it's smart, because it's allowed. And that's the trick. You're not solving the problem, you're renting your debt. While you sleep, the number grows. Not dramatically, not urgently, just enough to stay invisible. Here's the truth no one told you. You are not just in debt, you are inside a system designed to keep you there. Part 2. The system you don't see. You think your debt is personal. It's not. Look around. The company you work for, it borrowed money to exist. The bank holding your savings, it's leveraged far beyond what you imagine. Even your currency, it's backed by government debt. Debt isn't an accident, it's infrastructure. You don't question it the same way you don't question traffic lights or elevators. You just operate within it. Part 3. Debt becomes control. Fast forward. You're 28 now. You've leveled up. You own a house, you drive a financed car, you earn more than ever before. From the outside, you made it. But internally, something changed. You hesitate more. You stay in jobs longer than you should. You tolerate things you once wouldn't. Why? Because now your obligations have deadlines, and deadlines control behavior. Harsh truth. Debt doesn't need to scare you, it controls you quietly by limiting your options. Part 4. The invisible cage. Every month, before you make a single decision, the mortgage is due, the car payment is due, the credit line adjusts. Your income comes in, but it doesn't belong entirely to you. There's a gap between what you earn and what you keep. Debt lives in that gap, and it's patient. It can wait 10, 20, 30 years. Part 5. Business, where debt gets sharper. Now, you take a risk. You start a business. This time, the stakes change. Debt is no longer passive, it's active. Every single day, rent costs money, employees cost money, time costs money. You learn something most people never understand. Profit doesn't mean survival. Cash flow does. You can be successful on paper and still run out of money. Personal debt controls your choices. Business debt controls your time. Part 6. Corporate level. Debt as a tool. Now, zoom out. Inside large companies, debt looks different. It's no longer emotional, it's mathematical, measured in ratios, coverage, covenants. At this level, debt isn't feared, it's engineered. Used to extend survival, increase returns, buy time. Same concept, different scale. Part 7. When debt becomes strategy. At the highest levels, something flips. Debt stops being something you owe and becomes something you use. Companies are acquired using borrowed money. Assets are controlled without being owned outright. Risk is calculated, packaged, and distributed. And if things go wrong, the consequences don't disappear, they move, usually downward. Harsh truth number 2. Debt is not just financial, it's structural power. Part 9. The realization. Somewhere right now, another 22-year-old is starting their first job, opening their first bank account, getting their first credit card. They think this is about earning more, spending wisely, and they're not wrong, but they're not seeing the full picture. Final shift. Big idea. Because this was never just about money. It's about who controls capital, who accesses it, and under what terms. You started with a number, a balance, a small personal problem. But what you're really looking at is a system, layered, connected, and operating far above what most people ever see. You thought you were managing debt, but the truth is you were learning how the system manages you.